你好吗? Guten Morgen. Ohio. Yeah, you guys ready to go? Who's alive? Who's alive? It's 8:02 in the AM NYC. Oh, about 90 minutes before the open of the stock market and a new trading week. Yeah, it's going to be a good one. So I propose we start by going through the calendar, and then we'll do some technical analysis. We'll cover dollar and yen pairs. We'll also cover gold, oil, and Bitcoin. If you want some natty, maybe we can do some nat gas. And I bought 60,000 Shiba coins. I don't know why. 60,000! Yeah. So maybe I'll get rich soon, huh? That'll be great. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. No. It's inappropriate for some. Past performance, good performance or bad performance, it's not necessarily indicative of future results. Therefore, it's only logical that you always stay small, always stay humble, always focus on the long term, and never, ever risk money you cannot afford to lose. Hey, what's up, Bubba? Another trading day, yeah. Another traded week, yeah. I'm already thinking about November. The big NOV is coming up soon. Oh, I don't know, a week or something like that. But, you know, you got to think about next month, next week, and the next day. Today is already done, so we're focused on tomorrow. Today we're going to do, like I said, the calendar, and we'll do some technical analysis to try to set some things up. I don't know if you're a bull or a bear. It doesn't even really matter to me. Either way, I think if you've decided to be a bull or decided to be a bear, you'll make money. It's the indecision traders that seem to lose a lot because they're doing everything late or early and in the middle, which never leads to good results. So, hey, man, ask questions. I'll address them. I'll let you lead. You are the leader. I am your servant. I'm here to serve. That's quite literal. I'm here to serve. So I've set up a framework of things I'd like to cover today, but ultimately your needs become my demands. So let me know how I can help because I want you to succeed. Now, for you to succeed, you're going to have to choose a broker. Oh, yeah. What do you think is most important? Fast execution speed? Yeah, that's pretty good. Low or competitive fees like narrow spreads or low ECN costs? Yeah, that'd be great. Okay, how about huge swaps? Yeah, well, that's good. But ultimately, what's the big thing? Trust. So Traders Way has earned my loyalty and respect. I recommend them to you. Visit tradersway.com, open up a demo account. Go try those things. Fast execution speed, narrow spreads, huge swaps. But ultimately, over time, maybe they can earn your loyalty and respect too. Tradersway.com. Give them a shot, man. Let us start. Nothing going on today. Huh. Well, that's nice. That's good. That makes everything easy. What's going on today? Nothing. All right, cool. And by the way, I only have it set for medium and high. Sometimes this calendar throws what I would consider medium or even high stuff into the low, but let's just leave it here. Okay, big question. Does Australia have inflation? Okay. So that should impact the Aussie dollar today. Good morning. How do you calculate monthly targets? Easy. Okay, somewhere between M4 and R2. Okay, that's how I do it. Okay. All right, that was an easy one, so I answered that quickly. All right, so anyways, let's take a look. Is Australia facing inflation? Remember, I don't care too much about inflation unless inflation gets out of control. But anytime you have growth, okay, or a supply shortage, prices will go up, but capitalism will help the market normalize. You have to understand it's a normal part of capitalism. So like COVID-19 was an exogenous shock. At first it was demand shock, and then it became a supply shock. But capitalism will fix itself. Prices will be high for a year or two, and then they'll normalize. Great. So do you guys know Mohammed Al-Arian? I like his research. I like his point of view. He's one of the few people I'll actually listen to. Actually, he was on, I think it was CNBC this morning, and they were asking him about some other idiot talking about hyperinflation. Okay? And he's like, dude, there's a difference between, high prices and hyperinflation. So whoever it was that was talking about, oh my God, everything's out of control, there's going to be hyperinflation. Basically, Mohammed said it's impossible. Okay? Do you guys remember when I was talking about stagflation? Because I hear that a lot too. How many people remember I did a discussion about stagflation? And I said, look, there's like similar signs, like there's similarities, but they're actually very, 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 very different. Okay? Now I said you cannot have stagflation unless the government gets involved. The government creates stagflation. So how do you create hyperinflation? The government gets involved. What's the difference? One is a supply side, one is a demand side, but it's when the government gets involved. If it was a free market, you can't have hyperinflation. You can't have stagflation. It's only when you break the free market, and therefore you will pay the unintended consequences. Okay? So think about it. Was it capitalism that ruined Venezuela, or was it government intervention? What ruined Argentina? Was it capitalism, or was it government intervention? What ruined the Zimbabwe currency and economy? Was it capitalism, or was it the government? Their involvement in the economy. Okay? And take that on and on and on. Apply it to wherever you want, but realize it's probably not capitalism. Because what happens is if prices get too high, you stop buying. If you stop buying, then you have oversupply. And then the people that hold the inventory want to get paid, so then they drop their prices. That's it. Just let capitalism work. Okay? So anyways, Mohammed Al-Arian's response wasn't that detailed, but he basically said, you can't have hyperinflation. So whoever the other guest was talking about, like, oh my God, the United States is out of control, we're going to have hyperinflation. Mohammed Al-Arian just basically said, that's impossible. And I agree with that. Okay? Hope says, I just don't think capitalism has much of a moral compass. No, it doesn't. Companies don't have moral compasses either. Humans do, right, Hope? So capitalism isn't about morality. Now, I have very strong feelings. I'm a very pro-capitalist, right? So I bring it down to like human dignity is found inside of capitalism because capitalism rewards productivity. So if you're going to have self-worth, you're going to be productive, you see? So, but anyways, going back, I'll step back to my general argument, like capitalism isn't about morality. You need that? Find God. And even that, I'd probably argue religion isn't necessarily moral, but whatever. I don't need to go there either. The thing is, people bring morality, right? Either as individuals or as groups. Capitalism isn't a form of government. Capitalism is a free market so that you can balance supply and demand. Okay? So that's all it is, but it does work. So like, I don't think communism is a good form of government. But capitalist China, which is also communist China, is better off than when it was not a free market and communist. Just look at China when it wasn't capitalist and communist, and now it is capitalist and communist. They're better off as capitalists. Okay? So that's all I'm getting. So I don't know if democracy is actually going to win. I'm sorry, I don't. There might be a better form of social governance. Okay? But capitalism is definitely the winner. Because going back to like my counter argument was I actually believe productivity, individual personal productivity leads to self-worth. Okay? You value yourself because you are being productive. And you're not likely to be productive if there's no reward, because then you're like, well, what's the point? So if there's a reward, and capitalism rewards productivity, then you're like, I got up this morning, I worked hard, I achieved something, and I will receive compensation. So you feel good about yourself. Nice. Okay? Okay? So anyways, how dare you get me on that? What is it? It's 8:15. Like we've been talking for 13 minutes. All right, cool. So anyways, prices, Australia. Great. Durable goods orders are very, 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 very volatile. So it's not one that I pay much attention to. I'm wondering if we can pay more attention to it. Like, are people buying refrigerators? The problem is I bought a refrigerator, waited 6 or 7 months, and it never showed up. So I don't know if this is going to be a fair reading, but you can see where we normally are, right? Okay. And then COVID-19 collapsed durable good purchases. Okay. Then we went from zero to hero, but why? It's called the base effect. So it's not like orders went up 400% above normal. It's just a little bit over a big negative number, right? It's the change, the relative change, the delta, right? Then we go back and you can see we're farting around pretty close to normal, right? So like we could maybe do it this way. You know, there's a high normal, there's a low normal, and you can see we're basically inside that box now, right? Okay. So despite some inflation, it looks about, I don't know, it doesn't look crazy right. It doesn't look crazy wrong. Okay. Okay, you see that? Hope says, hey, capitalism doesn't do much for the whales. Well, I'll tell you what. If you have money, you can try to do something to save the whales. So if you don't have a lot of money, you can donate $5. Here's the interesting thing, right? So you can save $5, buy a bumper sticker, save the whales, and put it back on the back of your car. But capitalism also rewards those that somehow have taken risk or got lucky or somewhat, and they become millionaires and billionaires. So you wake up one day and you're like, what am I going to do with my $1 billion? Save the frickin' whales. Okay? Try doing that in a socialist pig dog country where everyone except the dictator is poor, and you're like, I want to save the whales, but I got no food today and my kids are starving. Okay? What about the whales? I'm going to eat the last whale. I'm going to eat it because I'm hungry. Okay? So saving the whales is great, particularly if you have the opportunity. Okay? And the opportunity is going to be led through, you're going to use your excess capital any way you want, which is cool. I love that. I love that. You in a capitalist economy, you can create excess. You can. That's the whole point. And then hopefully the government lets you use your excess any way you want. This goes back to I think it's John Locke. I believe Locke was the guy, if I remember correctly. It wasn't Rousseau. I think it was Locke that said, so the debate here was, you have your own land. This is my land. This is your land. Okay. Me, you. Okay. And John Locke was arguing that this should be mine. And the only role of the government is to ensure this is my land. And if you come on my land, the government will protect my land and shoot you. Or if a foreign country attacks us, our army, which I'm paying a little bit of taxes for, protects us, thereby my stuff. This is ownership. This is private property. So Locke is part of private property, right? But he also argued that if I grow corn, okay, if there's excess corn, meaning I grow corn, I eat corn, I save some of the corn for planting, but then there's still leftover corn. Well, some forms of government says, well, I got to give my corn to you because you got no corn. John Locke would say, well, what the hell does that have to do with my corn? You don't have it. That's not my problem. Right? And you're like, well, but you're starving. John Locke is like, well, that's not my problem. You should have planned better. You should have managed your crop better. You should have, right? So I'm not arguing the social part of that. What I'm saying is, all Locke was saying is he could do whatever he wants with his corn. He can give it to you, he could sell it to you, or he could just let it rot. Okay? So you can see now, I don't know what side of that fence you fit on. You're like, well, letting it rot doesn't seem right. That's the morality, right? Now you're like, well, what's moral? Okay, that's where the government does step in and say, well, based on our social infrastructure, meaning like the voters and society's point of view, there should be a mechanism for redistribution. Okay? And some of that is through taxes, some of it is through other things, but you have to decide how much of this excess needs to be shared with someone that has whatever the opposite of excess is, deficit. Okay? Okay. So anyways, it's an interesting discussion. What is the morality? Well, there's been hundreds of years of thought on this, and there's some fabulous reading, especially if you put it in order. Okay. Things like the British Corn Laws of, I don't know, 1622 or something, and its impact on rents. So you would want to read Rousseau for that. I don't even know how to do that. Corn Laws, England, 1855. All right, a little more recent than I said. And then you probably, Rousseau, probably. Rousseau. There you go. Nice. Anyway, so what you want to look at is Rousseau was playing around with the idea, and there's inside of his ideas are behavioral finance, which I think it might be one of the first behavioral finance writers that I can think of. But corn, which is just grain, by the way, what I think of as corn is actually maize, and corn is just all grains. All grains are corn, so it could be wheat, it could be barley, okay, stuff like that, or it can be maize. And then and productivity of land, and really the opportunity cost has to be thought about that. And then how all this incorporates into rent. How much do you charge for rent? And it's really interesting if you like historical economics. Rousseau, Locke, Hobbes. It's really great reading. And by the way, these old writers are wonderful writers. It's wonderful writing. Okay. Has anyone actually read The Wealth of Nations, 1776? It's beautifully written, right? If you've ever read Machiavelli, right? He was a wonderful writer. People don't write good no more. Okay. Anyways, let's go back. So, CPI, great. Then we have durable goods, probably not helpful. I think we're back on trend, which is in of itself, if we're worried about inflation, you can say, well, if you look at durable goods, we're back to sort of pre-pandemic levels. Great. That's all I care about. Okay. Obviously, the interest rate decision tomorrow is the big one for Kitty Cat. And then later on in the Asian session for Japan. Okay. Okay. Oh, show me the book. What? Wealth of Nations? I do have it. Oh, it's stuck on the shelf. Oh, I can't do it. It's stuck on the shelf. Oh, now I messed it up. Now it's messed up. All right. Yeah, I do have to put on the gloves. All right. So great. German unemployment. Very interesting. Okay. We'll just move on to GDP. Yeah, I was right on this one. I was doing the calendar last night in the live trading group, and I did this week's calendar from my brain. So I'm like, oh, next week we're probably going to have this, and next week we're probably going to have that, and we're probably going to have GDP, and it was great. So anyways, yeah, so another look at GDP. Great. Remember, a lot of people are panicking like it's all over. So we'll see what's going on here. Aussie retail sales. Yeah. Okay. So the question is there inflation? And if there's inflation, are they still buying despite the higher prices? Or not? Okay. And what does this lead into? Well, if people don't have jobs, they're not going to feel comfortable spending, even if they have money. You have to understand that. It's the wealth. Well, let's just say it's a behavioral effect. If you've lost your job, even if you have, $100,000 in the bank, you stop spending. Okay. And so that's more of like, well, so do Australians have jobs? What does Australia do outside its own borders? Well, it tends to export a lot of natural resources. So I'm not thinking about input like foreign direct investment into Australia, more like because domestically, if you think about it, like foreign direct investment, okay, that pushes up the value of the Aussie dollar. Okay, so you got FDI, that is an input. But most other activities inside the borders of Australia, it impacts the economy, but it doesn't impact the value of the Australian dollar because it's just Aussie dollar for Aussie dollar for Aussie dollar for Aussie dollar, and nothing's really happening. There's no demand, there's no supply chain, right? Great. But how about this? Is Australia exporting to foreign countries? And if so, that would increase the value of the Australian dollar, but that because of how much of the Australian economy is exporting stuff from Australia to other countries, that could impact indirectly retail sales. Okay? Right. And right, the thought here is it seems crazy over here, people throwing money everywhere. Well, that is what happens to when you have excess or excess. So you have corn to eat. You have enough corn to get you through the winter. You have enough corn for seed next year, and you have all this other corn. So that the value of the corn that you're going to use to eat has a lot of value. The corn that you're going to use next year to plant a new crop has a lot of value. All this excess tends to have less or even little value. So what Locke says is, hey, if I want to let this rot in the field, I'll just let it rot in the field. It's my corn. But capitalism says, hey, you should probably trade that, okay? Because it has low value to you. But what if you took something that's now almost worthless to you and you trade it for a set of tables and chairs? Now you got nice table and chairs in your house. What if you traded it, I don't know, for whatever, okay? So you're still incentivized to trade it. What Locke was just saying is you don't need the government to tell you. That's all he was saying. He's like, sure, I'll trade it, but you can't just come in and give it to my neighbor. Screw you, right? So there's sort of the difference in the morality. He says he should be able to make his own choice, but for the government to come in and just take it from you and give it to someone else, he's like, well, that's not productive. But if my neighbor if my neighbor turned my grain into alcohol and then shared some of the alcohol with me, shoot, I'll give him my excess, right? So all he's saying is the distribution shouldn't be because of one has none and one has excess. He's like, you should be able to trade it, so therefore everyone's incentivized to be more productive. Okay. Anyways. Cool. Moving on, PCI, or PCE, I should say. PCE, is that way out there? We already did this one. Yeah, I guess so. Okay, moving on to Friday, PCE. And this is a good one because the Fed watches it. But once again, we already have a reasonable idea of what's going on. So there's not likely any significant new news, but you can see, okay, there's a big difference between 2.1 and 3.5, right? So the question is, will it normalize? Do you guys remember like 2 years ago, the Fed said that they were going to let it go? They had a flexible target. Okay. That they were going to let it go over and let it come back. Well, that's what's going on. Cool. Nice. Cool. So this will put it into context. If it comes out 4.2, you're like, holy schnicker-schnacker. But if it comes out 3.2, you're like, oh, okay, well, it might be on its way back to normalizing from 3.5 to 2.5, let's say. Cool. Fine. Great. Fine. Good. Okay. You ready? Let's do the next one. Not loading. Not loading. Why is it a low? Is it my, oh. Well, looks like we got a dead app. Dead app, dead app, dead app, dead app, dead app. All right. All right. All right. So let's go over here. Dollar strong, yen strong, not interested in trading. All right. Goodbye, everybody. But remember, I'm biased. Okay. Now, if you're doing pure relative strength, what do we see here? Well, in the short run, there's some Aussie strength. In the short run, there's some pound strength. Euro is falling off a cliff. Kiwi on the short run is exhibiting some strength. CAD exhibiting some strength. Okay, and I'm just going to mark this in a different color. Euro just sucks. Okay. Meanwhile, our funding currencies, yen strength and dollar strength. So what are you going to do? Pound yen? No. Aussie yen? No. Kiwi yen? No. Now, how about euro yen short? No, because the way I trade is I try to trade a correlation, not just pure relative strength. So, I mean, I could, but I probably won't. Okay. How about pound dollar? Well, again, pound is strong. Your dollar is strong. So no. Aussie dollar? No. Kiwi dollar? No. USD CAD? No. So your choice is Euro CAD or Euro versus CAD, Euro versus yen, Euro versus dollar. Yeah. So just Euro is weak. And that's what this shows. This is an index. So it shows you Euro is weak versus everything. So today, if you want to be a day trader or intraday trader, you could try to throw down some Euro short trades. Okay. Oh, thank you, Andrew. So Andrew says, so what's the impact for the currency? What currency? Okay, that doesn't show anything to do with currency. That shows the supply and demand for ships. So the way you should be looking at it, Andrew, is macroeconomics. Are people shipping? What if the answer is no? If no one is shipping, there's no demand for ships. What will happen is you'll see the price of that index will go to zero. If no one's ordering anything, you'd go to zero. And it was pretty close to zero for a while there. Okay? So then what happens? Well, then you have a fleet of ships. No one's using them. Some of the ships are new ships. Some of the ships are old ships. And some might be very old. And they're costly to maintain. And then when you are using them, they're costly to use. So you're like, well, I don't need this ship if it costs me a lot to maintain it while no one's using it. Then you're like, I'm going to sell it for scrap metal. So you sell it. And instead of paying to maintain it, just floating out at sea rusting, you sell it to a scrap metal and you convert your steel ship into cold hard cash. And you keep your best ones, your newer ships, the most efficient, the ones you just bought. There's no reason to scrap them. And you wait for demand to catch up. Because what will happen is if everyone is doing this, and of course we're talking about the aggregate, if everyone's scrapping their old ships, then when demand starts to pick up, well, there are less ships. Okay? So if demand starts coming back, supply and demand will find equilibrium more quickly because there is less supply, and demand went from zero to closer to normal, and you'll hit a normal supply and demand fairly quickly. If demand goes above normal, well, now there's a shortage of ships, and now prices will go high. And then these companies that are making all this money moving cargo around or whatever they're moving around on the ships, now they're like, look at these prices, right? So one of the things I tracked over the weekend is the price of moving things around the United States on trucks. Okay, so I looked at multiple companies, and they report, prices, demand, margins, and stuff. So, like in second quarter, shipping costs or prices, if you will, were up 25%, and then they were up another 25% in the next quarter. So it went up 25%, and then it went up another 25%, right? So you can track all this, but what happens is, if you're talking about ships now, if there's a shortage of ships and prices are high and your margins are high and these companies are profitable and they're sitting on cash, what does that do? It increases investment, and you start buying more ships. Then the supply of ships comes online, new beautiful ships, super high efficient quality ships, okay? And it lowers prices, but improves in efficiency. So now it costs less to run your fleet, and prices have gone down, so which spurs more business activity from your customers, because now, right now, if you want to ship something from China, it's $20,000, right? 2 years from now, that same cost will be $2,000. You're like, oh my God. Back in 2021, it was $20,000 to ship a container from China. Now it's $2,000. Boom. That feels cheap, right? Well, we will get there. Okay? Okay? Boom, 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 boom. So once again, I think capitalism is the way to go. Joe Biden instead says, well, the government should step in to the ports and fix this by unionizing all the port workers. And you're like, wait, whoa. No. This isn't a capitalist challenge. This is an exogenous supply shock because of a global pandemic. We don't need the government to come in and fix it. We just need to be patient. It'll work itself out. What you need is just let it work out. But whatever. So I'm cautious more about any time the government steps in to fix things. Massive red flag for me. Massive. So when Biden says, oh, we're going to fix this thing with the Port of Los Angeles, and oh my God. No, thank you. No, thank you. Okay. So good. Andrew brings up the Baltic Dry Index. Good. Awesome. Thank you for that. So let's do some technical analysis. You guys want to do, let's do a poll. Okay. What interests you most? Gold, oil. I'll throw in nat gas. Natural gas. Oh, wait, I have to have all caps. Natural gas. Bitcoin. Okay, let's see. Boom. Wait for it, Dan the band. Don't wait for it. Okay, let's see. Do the poll. Ojo will get there. Or is it Oho? All right. Breathe out so I can breathe you in. All right, we got 64. That's enough. Can we look at some yen pairs? No. Of course we are, dude. Of course. We do it every single day. Rowan? Yeah. All right. So we are moving over to commodities first. Gold, number 1. 2, Bitcoin. 3, oil. Nobody cares about natty. No nat. All right, cool. So let's do that in that order. Let's move to commodities. Okay, gold. Even more than oil, huh? Gold. Let's see. I have it going up. Oh my God, it went up. Well, there you go. That's the plan, Stan. Breathe out so I can breathe you in. Okay, so you can see here the down, the up, the down, the doop. Next target, Ayaz. Let me adjust this so we have the conservative target as well. So I go to my biased pivots, and I want to plot M points on. True, pachow, la-di-da-di-da. So 1830. So we got $30 above us, maybe 1842. You could just say 1850. Okay. So it looks like this. Down, up, down. No, the other way. Up, down, up, down. Up, down. Coolio. Okay, right now we're riding the 4-hour 21. Look at that. Okay, nice. So, yeah, what do you think? 1850 maybe? Probably like this, probably like that, probably like that. Okay. Okay, cool, right? So let me continue to draw this for you. Let me catch up. Okay. What do you stink? Glad I came up with it. Oh, you're welcome. Like I love to say, not only am I smart and good looking, but the best thing about me is my modesty. All right. Ciao. So there's your gold. And look, I've drawn this out for you guys here. Look, higher high, higher low. Now we're making a higher high. Great. Nice. Cool. We're even blowing the pivots out and everything. The fibs. Just working our way up to triple digits. That's all. Cool. Great. Nice. Okay. It's easy to do if you're opinionated. See, if you're a bear, you haven't had an opportunity to sell. You understand that? You might be a bear, and I'm not saying you're right or wrong. You just don't have any opportunities to sell. So you haven't lost any money. Good job, bears. Bulls, you're just using price action. And so you buy dips and you're making money. Cool. Okay. Isn't that neat? How cool is that? Okay. Isn't that nice? Cool. So gold, oil, Bitcoin. I guess I did it out of order. I apologize. All right. So what do we see here? Kicking off the 55. Okay. Kicking off the 55. So you must be careful. What I would look for if I was a bull is something at least like that. So right now, I'm sort of letting it go a little bit. Okay. I'm looking at it this way, and what I prefer is to see something like this if I'm going to buy it. Okay. And one of the things we were talking about in the live trading group last night, because we meet Sunday nights at 8 p.m. So we already have all this planned out. Okay, you're just getting it 12 hours late. But anyways, that sets up a buy. But also this tells us something about the near future. Is the internet down? That's weird. You guys back? I guess you're back. No, it's excellent connection. It went from not connected to excellent connection. I don't know what that's about. Anyways. So I mark it up that way. You see this, what we have from the past. So I did this in the past. And I want to see evidence that that's support. And right now it's not really. So it's close. It's close to buyable, but, you know, I'm a patient person, so I'm not quite ready. Okay, but, you know, I might buy it later. I could do this, but I prefer something slightly different. Then we have a bullish day today, and then I catch an Asian fade. Okay. Cool. So let's go on to the currencies. I'm going to go back to the index, and both these things look not good for me. They could be great for you, but not good for me. But again, dollar strong, Aussie strong, don't want to trade that. Dollar strong, pound strong, don't want to trade that. Pound strong, dollar strong, CAD strong, don't want to trade that. You see? So really, there's not a lot of opportunities, but let's look at the technical analysis. So I said USD CAD doesn't look good because they're both strong. Now dollar, US dollar, is slightly stronger than the Canadian dollar. Okay. And we have a top up there. So I look at all that and I'm not interested. Aussie seems relatively strong, but we know US dollar is relatively strong. And I still don't really have a step up, but if I was going to try to be a bull, I could consider something like that. But let's take a look. Okay, we were supposed to make a higher high before we get bullish. So if anything, you're neutral. But you know what? You were bearish before, so that's a beginning. Okay. Can we look at USD ZAR? Sure. Have you guys seen lira? Anyways, so this is bearish, okay? And this is neutral. And it could be the beginning of something beautiful. Really, I don't want to go ape crazy until I get something like this. Okay? So I'm like, oh, it's all right, right? What did Crocodile Dundee say? Oh, you can live on it, right? But it tastes like shit. No, that's a terrible Australian accent. Crikey. Okay? Anyway, so blah. Okay? So, yeah, there's hope. There's some hope on that. Okay? So maybe there's a buy there, or maybe you buy a bottom, or you just wait. Okay? All right, so there's your Aussie. Kiwi should be roughly the same, and it's more triple bottom than double bottom. Cool. Great. I'm not interested. You can have it if you want. It's all yours. Okay? You can see it's channeling down off the profit target. Okay, remember, this was the logical exit. Okay, and it's been working its way down ever since. So until we start making higher highs, higher lows, I don't really want to play this game. You can have it. It's all yours. Now, of course, you can short that. You can do whatever you want. Now, this is the best short because it's the only one that's weak. So what do we see here? Talk to me, Goose. I see a triple top. Okay. I see a breach. Okay. And here's the next level. All right. Cool. So this is my buy zone. You see this? This is my buy zone. Do I buy that? No. Because this is a low. And only losers buy low. Okay. Okay. Bulls buy higher lows, not lower lows. And then pig. Once again, up into this roll reversal, worked its way down. Okay. And I believe we talked about this in the day trading group last night, where I'm like, look, and look, it's all there, but whatever. All right. Cool. Great. So that's it. Oh, no, I got a request for exotics. Okay. Rand. Okay. I want to sell this. We're on top of the 1 hour, 21. I cannot sell it. Okay. So if things work out great today, we might get something like that tomorrow. But right now, the USD is strong, so I'm not interested. One of the things I want to show you, let's change this. I don't know if I can, actually. Lira. Oops. Holy friole. Look at that, huh? Okay, look at that. And you thought Turkish lira couldn't get any worse. Oh, it got worse. It got a lot worse. So Erdogan is now kicking out foreign ambassadors from Turkey. Remember, they're in a foreign currency crisis. And they're kicking out foreign ambassadors. Like, they don't have any friends. This is all self-imposed. This is not the good people of Turkey. This is not a failure of capitalism. This is government intervention. This is a different scenario, but the same sort of cause. Where earlier I said, it was government intervention that impacted Venezuela negatively. Argentina negatively, Zimbabwe negatively, where you get hyperinflation. This is all government created. That's it. And this last massive move of just incredible Turkish lira weakness is literally the government coming in and being stupider. You know, I have over the years have had a fair amount of Turkish friends. Turkey is a place I'd love to visit. I know several people, Americans, that moved to Turkey for 6 months or a year or two, I think a year, moved to Turkey a year and loved it. Loved it. I hear nothing but good things about Turkey. So I feel really bad when I see this. But then I think, well, maybe it's time to go on vacation in Turkey, huh? So anyways, it's terrible. That's a self-imposed crisis. Matrix says that's the USD in 30 years or maybe sooner. No, that is not likely. There's structural differences here. Turkey doesn't have any foreign currency, and it has massive foreign debt. United States have massive levels of foreign currency, massive levels of assets, massive levels of productivity, massive levels of natural resources, massive levels of exports and import, massive levels of foreign direct investment, just massive levels, okay, of which Turkey is not exporting. It has super high levels of debt. You're like, well, United States is trillions in debt. Yeah, but it's productive. It's like my neighbor, let's say, has $1 million mortgage, so they must be poor, right? Not likely. They own an asset that's appreciating in value, and they also have income to support that. So there's a big difference, okay? If you have massive debt but no job and no assets, this is what's the problem. Turkey doesn't have any assets, and they're not exporting, they're not being productive, and it's all government negligence. So that's all. Yes, I did, Richard. Yeah. So, yeah, it's hard to argue that the richest, most productive country in the world is going to end up like Turkey in 30 years. No. But if 40% of the population stops working, yeah, maybe. Yeah. But I hope that's not the case. Okay. Okay, right now, the official unemployment rate of Turkey. Wait, hang on, let me do this. Go here. Okay, we're looking at like somewhere between 12 and 14% unemployment. So anyways. Okay, I don't think it's a fair comparison. Now, will the dollar weaken? Yes. But remember, that is a good thing because it's a reserve currency. Okay. All right. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Unless if you're in my live trading group, then I'll see you at 3 p.m. today, and then I'll see you at 8 p.m. today. So thank you for all that you do. Thank you for the hard work that you exhibit. I'll see you later.